It has grown as an asset. It's gone up. I think it's 2 million% since inception. No other asset in all recorded history has ever done this. And we haven't even started. I still think there's probably another 100x from here. Nobody in history, anybody, has ever been given a whole asset class, an entire asset class, that can go up 100x to $200 trillion. It's a bunch of retirees, the baby boomers, and they've kind of screwed it all up because they've got all the debt, they've got too much equity exposure. It's really hard for them to retire. This is why the Federal Reserve don't like equities going down, because you've got this richest group on earth who are kind of stuck. They never got enough money to retire on. But I want to look through the eyes of the millennials. So they are 32 years old. At the same age, their parents at 32, the baby boomers, had all-time cheap valuations of equities, all-time cheap bonds, all-time cheap credit, all-time cheap property, right? So they couldn't help but make money. They kind of screwed it up because they actually ended up going into debt as well. But they couldn't help but make money. So then the millennials had the opposite: all-time record valuations of equities, all-time record valuation for bonds, all-time record credit, all-time record highs in property. So I'm like, these guys are screwed unless something else comes along. And that thing is crypto. Because the future expected return of crypto, it's been growing at 213% a year in returns. That's how much it makes, even though it's very volatile. Sometimes it's down to 70%. Over time, you're making 213% a year. It has grown as an asset. It's gone up. I think it's 2 million% since inception. No other asset in all recorded history has ever done this. And we haven't even started. I still think there's probably another 100x from here. Not even the baby boomers got given that. The S&P didn't go up 100x since 1980. So this is the magnitude of what's there. So I'm screaming from the rooftops saying, you might be cynical. You might think you don't understand it. You might think you can't afford to play in this, but you have to listen, because this is the opportunity. You can't come back to me in 10 years' time and say, well, we missed all of that. All the rich people got richer. No, you, I, everybody else is saying, now is your time. Don't be irresponsible, dollar cost average, do all the right things, but here is your opportunity. This is the biggest opportunity I've ever seen, and I'm going to take advantage of it, and so should everybody else. This is not rich or poor. This is an every person opportunity, and we've never had this before, ever.
So this was 2012, and so I learned about it. I invested in it for the first time. It went up 100% in a month, and I closed my position, took my money, and went, wow, okay, this is not normal. And then I kind of did the first analysis of stock to flow, meaning I looked at it like gold and thought, well, with this much supply and this much gold above ground and this much known reserves, if we imputed the same thing for Bitcoin, when gold was at 1,300, Bitcoin should be at $1 million. So I'm like, okay, this is interesting. This, from a macro perspective, looks cheap. I also realized that after 2012, the next global recession would see this parallel financial universe using blockchain technology meet this macro world of excessive debts, a financial system that's somewhat fragile, and all of these things would have a horizon point. And that all happened last year. I think it actually encapsulates all of these other asset classes because it's a much more efficient way of transferring, owning, proof of ownership, all global assets. So I think it's really big and it's hugely disruptive. As Mohammed said, we don't know actually what format the central banks are going to do this. My guess is they'll start with the non-disruptive version, as he suggested. I think they will move towards the disruptive version. We're already kind of getting noise of that out of the US, that maybe they want to do it in conjunction with the private sector. Maybe DeFi is an efficient way of doing it and fintech is an efficient way of doing it. Do we need money center banks? Okay, that's a big change for the world. Or money center banks have to reinvent themselves. That's fine. That's what technology does. It strives all of us to improve our business models or adapt.
I try and think of the world in different people's eyes. And let's say you're the typical millennial kid who's now 32 years old, I think the average age. So you're just starting to come into peak earnings. You've got no savings. You've still got your student debt you're trying to get rid of. And then you look at real estate. So look at traditional investments. So what are investments? Investments are basically future consumption. You buy something now, you hope to sell it at a higher price to give you consumption in the future, right? When you retire or whenever it is, right? That's what an asset is to us in the investment world. So what assets do they have? They have the equity market, all-time record high valuations. They have the bond market, all-time record high valuations. They have the real estate market, all-time record high valuations. So traditional assets to them, they're buying very expensively. Now, if you look at the size of those markets, equities, bonds, and real estate on a global basis, like global real estate's about $100 trillion. Global equities, global bonds, they're all like the $200 trillion market. And then you've got crypto, the fastest adoption of technology in all recorded history, which is the internet of money, where all of these things are going to be tokenized and will be part of this. There is crowdsourcing of information, the quality of information that's out there. Yes, there's a lot of noise, but the quality of information, the people who are trying to help in this space on Twitter, on Reddit, and all of these forums is extraordinary, even on TikTok. So people are trying to help you because of network effects. Means if you bring more people into the network, it goes up in value. And also people passionately believe in the point of this thing. So it is engaging young people. They have no trust in institutions. They trust institutions implicitly in some ways, but finance is the big one that they don't, because their parents lost their houses and jobs. And so when you're seeing an opportunity that is social media in nature, that's native to the internet, that they understand and live in, that offers them huge potential reward, and they can stick it to the man, well, kind of gets interesting. So that space is currently about $1.5 trillion today. So for it to meet somewhere around the equity bond market size, that's 100x from here. If it actually absorbs all of those markets, well, that's a 500x. So 100x, you, me, nobody in history, anybody has ever been given a whole asset class, an entire asset class that can go up 100x to $200 trillion. So, and it fractionalizes. So it doesn't matter whether you earn £20,000 a year or you earn £200,000 a year, you can both put 10% of your income in it because it's fractional. So now you're on the same playing field. Okay, that gets interesting. So we can all have the same percentage in Bitcoin, but then it's going to get more interesting because, like, if you've got an apartment in number 1 Hyde Park, that thing costs £200 million out of all of our reach. But the guy who owns it probably bought it for 100 million. He's made 100%. He's made 100 million. But we can't. And the average apartment in the outskirts of London hasn't gone up as much. So how do we make the money? Well, we're going to tokenize real estate too. Because then maybe out of one of those fancy buildings, one of those apartments gets tokenized. So you can put in 10% of your net worth into it, and I can put in 5% of my net worth, and somebody else can put in 50% of their net worth. And because it's fractional and it's tokenized, we all get to participate without it just being the rich get richer. Fascinating. So there's a lot coming.